Good morning, everybody. Let's get rolling here. All right. So we got a bit of a mess going into today, and there's multiple time frames kind of out of sync. And it's always that way when you have any kind of a turning point. And usually the first day of the turning point is the most horrific. Meaning, what I mean by that is that it tends to be whipsaws until things get going, because when generally if prices are moving up, and if they're going to turn over to move lower for even several days, buyers tend to not give it up so quickly, and makes it rather choppy. Whereas when prices are going down, the traders that are holding losses are shorting. There's more fear and related with that, and the turn historically comes relatively quick. Right. Good morning, Alfredo. So yesterday was a turn day. Obviously, you can see that on the S&P futures that we have up here. We got a red bar. And when we see a red candle like this, one of the things that we observe or analyze is, well, what was the depth of the retracement into the green bar? And what was the size of the green bar that preceded it? So one of the things that we talked about yesterday was the range expansion. And again, we're looking at the 24-hour chart, which is the futures here. And the SPX and SPY don't look just like this, but let's just go with this for now for the analysis. This is what we're looking at. So down at support was a wide range bar. We call a wide range bar igniting. And there were lots of congestion over here to the left that prices had to get through. So when we see that, it tends to make for a difficult trading setup, meaning you got all of this congestion to get through. And historically, there's going to be a reaction, some reaction, meaning breaking of a prior day's low. That never happened on the way up. So this is one of the ways that we do, what we tend to call our factory work, or a systematic analysis to say, well, I recognize what's going on over here. And historically, there's a likelihood that there's going to be a reaction. And by reaction, I mean something like this. So what does it have to do to trigger something of a meaningful reaction? Well, we say it's got to break a prior day's low. And it never did that. And it didn't even do that yesterday. But the depth of the retracement into this range expansion candle here I'm just eyeballing that about 80%. We don't get out the protractor or the fib tool or any of that. It's not necessary. But one of the other things I mentioned yesterday was that when you get a wide range bar at support, and we interpret that as igniting, and then we just, how far does it go up? Where's resistance? Is there a void? There wasn't a void here. However, this bar, notice that there's little to no tail at the top. Yeah, I know, Alex, no fib tools, but, I gave up the, the little sucker that your mom put in your mouth so you wouldn't suck your thumb, and, all that kind of stuff. The training wheels off the bike came off, the little blinky, and, all of that stuff. No, I started out 30 years ago with that kind of stuff, just like I did, many, many years before that with, the little blinky and all of that. But, no more blinky. Anyway, and one of the interesting things was we look at the chart is that on the way up, and I've seen this as all the years I've done this, it's really interesting that how traders are reacting and their thoughts. And so on the way up here, there was this somewhat hesitancy tail on the top, larger tail on the top as they're selling into the resistance. And then on this bar, there's hardly any tail after, things are going up for 5 days. Now there's little to no hesitancy, and the buying continues right virtually into the close with a range expansion bar. So a range expansion bar after a greater than 100% retracement, as I said yesterday, historically leads to a slowing in momentum, not necessarily a trend change. So there are other factors going on here that lead to some, not so much confusion, because this isn't confusing. It's just that we have to recognize that we do not have an established trend in multiple time frames. So that's what makes things more erratic. Whereas where prices were going up over here, on the weekly chart, and if we scroll back to the daily, things are going up and they tend to go up in a more fluid way. So now we've got this red bar yesterday, and the depth of the retracement was pretty deep. Now, as we look at the futures here, we can see, well, there's a support area over here that has to be dealt with. One of the things to take away from this morning is that, yesterday afternoon, where we got that sell-off and we got to take advantage of that in the room, right? Some of us were shorting the futures. And so that created a void up above, which means, hey, this could have rallied all the way back up to the high. That's a possibility because it creates the void there. But rather, so far, it's created a pivot here, which made new price resistance and a reference point. And when it was retraced, sellers stepped up again. So we're beginning to get a lower trading range now in the S&Ps. Now they bought the dip too. So there's a battle going on here. Right? It's not like, okay, here's the reversal day and the buyers are just throwing in the towel and it's falling out of bed. That may happen. So with this support over here, ideally what I'd like to see, maybe a little bit more chop here pre-market, or maybe an attempt to go back up here and then roll over again, because another MTS concept. Corrections through time that move away from the support points below have the potential or probability of being able to break through it, which, it's probably this low right over here. Let's just move this down here. So that's our next reference point on the daily chart, which would line up with this. So we'll see if this begins to move lower, and we'll just take it step by step to see how far this pulls back. And we've got a really, again, out of alignment multiple time frames. And we're going to, today, Dan and I are going to be doing multiple time frames in MT Live. So you should definitely log in there. I'm looking forward to this. It'll be a good MT Live. So this took out the prior high. So that was a bullish sign for to get through here. And so maybe some sideways price action. We just don't know. We're just going to have to see how far this actually pulls back, or the lack thereof. Maybe this could be going up to the highs here. And now we start to look at other levels to get maybe some clues by looking at other levels. What about scenario of closing higher up to 3160? Well, that wouldn't change anything. Just like McGraw, we were tracking prior bars lows on the way up, right? So far pre-market, this is breaking a prior bar's low. If it was gapping up here, if it was gapping up to 3160, that would be bullish, right? An impressive gap up after a red day. But if it rallies up there, if it was to close up there, well, it still wouldn't take out the red bar's high. So here we're just reversing. Now that we've got the reversal and an initial break of the low, we begin to reverse the factory work. So I don't know what it's going to do today. So far, it's a standoff. So we'll see if it goes lower, and if it does go lower, well, how low to where, right? We look to the left and we just repeat what we do. Now, as far as SPX goes, above yesterday's high would be an obvious place, right, to be looking, up above here, up above 31, let's call it 3190. Yeah, there you go. 3190 would be ideal. Especially this is, we'll see spiders, but we know they're a bit lower. They're just hanging here. So up above 31.90. And of course, we'll see if it begins to drop, then the premiums pop on the puts down there, and then we'll watch for a reversal maybe around 10:30 or so. We'll just see how it plays out. 30.90, 30.90, there's really nothing there. So we'd have to see the markets create some support because there's nothing here. There's an unfilled gap right down here, 31.11, 31.11. So I'm not so sure on the put side if this gets going unless we see some kind of meaningful reversal. So we've got just nothing to the left here, on the way up. So 31.20, maybe. It's nothing of significance, Clint. And it's the unfilled gap. That's where I've got that dotted green line. So, we'll see. We'll assess it as to what it does here after we get the open. But again, looking at, I guess, some of this. I guess the gap in this area here. So even if we could get something possibly at 3,100 and, the whole number being there, even though there's nothing to the left, we'll see if we get something going to the downside. The weekly chart is just, chop, chop, chop. So we're just getting a trading range now going on here on the weekly chart, and we'll just see, how this unfolds, throughout the week. That's all we could do. I say it is what it is. We're just getting 1, 2, 3, 4, 5, 6. We're into the 7th week of sideways going nowhere after a run up. And that certainly could be construed as being bullish, but eventually at some point it's got to break out. And we'll see. And, our sentiment here certainly isn't supportive of that breaking out. Ideally, we do get this move to the downside, which would kind of take some of the edge off of this, so to speak. And so getting this pulling back and breadth maybe coming back down here. Breadth has been crap, technical term, bad. Even though we've seen this push up, breadth has been pretty anemic. And because primarily all the buying is in technology. That's why, the NASDAQ futures are running up, and you've got the same wide range bar. Yesterday was a topping tail. So far inside, really going nowhere. But that's good as far as the short side goes, because now I like this. One of the concepts that we look at on a daily chart is ideally when we get some kind of a sell setup, you do get a couple of days of going sideways because it builds a launching point to the downside if things can break. As I said, it moves away from these reference points of support. So a couple of days going sideways rather than, hey, you got the 1-bar reversal. And if we can get a 2-bar reversal or a 3-bar reversal at the most, and then a break, you've then created an overhead area of resistance. So you think about what's happening here. Well, buyers stepped up, buyers stepped up. Buyers stepped up. They're not pushing it as far to the upside. They stepped up here. And as it ran up, they got caught. So we look at charts from the point of view of what other people are thinking. What are they doing? So a break here, these buyers now have losses and they start to sell. The ones that were buying here start thinking, hey, let me take my money, what's left. It's not going to go up. They were trailing. It's not going up, so let me sell. And the whole thing tends to feed on itself, and then eventually things, they pull back to some level, maybe here or lower. We'll just have to see how it all plays out. All right, let me speed it up here a little bit. And Dow has been weaker. All right, deeper move into the red bar, the wide bar. This could not break through the highs as the S&P did. Obviously, the NASDAQ did. So relative weakness. The Russell has been even weaker, and this is where potentially the good money can be made on the short side, picking on the weakest one, right? Wide range bar creating a void, spiked up all the way back down, chopping around here. It's got plenty of room to fall. So this is where I see a bigger opportunity. And should the weekly actually break through these lows here, it's going to be something that would lead to a bias of the other markets also beginning to fall apart. And we know that the financials were weak yesterday, and especially the regionals. So why didn't this fall more? Because the biotechs were strong as hell. And so that's something to keep an eye on here. You know, do the biotechs begin to falter? Look at IBB or XBI, see if they begin to falter. And if you got XBE also faltering, well, this is going to fall, likely fall hard. All right. And bonds are down a wee bit here. You know, no big deal. But resistance so far holding up okay. Oil up a little bit. It's been just in a trading range for the longest time. Ranges are narrowing here. And we talked about all the uncertainty yesterday. Gold, right, starting to move up. I mean, we've been talking about this for months. Bullish, that it's going to go higher. You know, a little resistance up there, but you know, this trading range and even the larger trading range that it was in for some time all supports a bias that gold should continue to move up and probably up toward 2000. And who knows, you know, with all the liquidity that's being pumped into the system, maybe it's going to go even further, and that inflation will come. And so we'll have to see if that's the case. We should see at some point, we should see, and we want to see really, the 10-year start to push up here a bit, and interest rates going up, which would signal that the economy, as bad as things appear they could be, not by what the stock market's doing, but you know, businesses being closed. Well, if we see interest rates starting to move up, that means that there's a demand for money, and that would be a positive. So we'll see how that all unfolds. And silver starting to perk up here. This should now play catch up with gold, and it's got a huge void up above. So it just could be the starting point where silver is going to start to move higher. All yours, Dan.
All right, thank you. Yeah, we have about 6 gold positions on. They're all doing great, and yeah, I like this SLV here. So we'll be watching that ETF as well as the silver stocks. Yeah, SIL. Yeah, they look good. Yep, they will be on our list today. All right, all our opens are fine, except one. It's not, you know, we were short the 235 put spread on Facebook, had a beautiful breakout yesterday, beautiful 15-minute chart, closed with a topping tail. So that's the only one that I don't like, the reaction after our entrance. Everything else is doing fine. So I want to go right to gappers. If you have anything you want to look at either on your own or opens, just ask me. Fizzler here looks great. The sector has been doing well. So I like this as a 1, 2, 3, as well as a put spread. Let me just look real quick if there's anything for the 50s. In a pattern like that, I wouldn't mind going out to next week, although Friday's obviously better, but no, 0 by 32 for Friday. Next week, they're a little spready, 56 by 78, but I'll watch it after the market open. A room, AUY, yeah, looks fantastic. Yeah, I like it. Yeah, I just did a quick little lesson on this BTG we got into yesterday. We bought the $5 in the money August calls. TGTX. It's a wide range bar. That ideally I would prefer a 1, 2, 3. Hey, Alfredo. KSS got an upgrade. Goldman upgraded them. I don't see any pattern. Daku is buying some company. I don't know why it's gapping up, but there's no pattern. What an incredible run. Wow. Tiger is a sloppy 1, 2, 3, but it's gapping up again. No pattern. Tehran, PAS. Yeah, no, let's definitely scan silver stocks today. XLE, we got short a couple of oil stocks yesterday. So XLE, you can short XLE yesterday's low, or I posted a call spread for next week. This Nikola we've been watching tank the last few days. Now it has a bullish gap up with a price void. So let's watch this for a put spread for Friday. The out of the money puts are still very juicy. Lorena, your drop down, please. Yeah, these cruise ships and airlines are still in trouble. I talked about these cruise ships yesterday, and they're sloppy because they have the support to the left. Saying United's down again, saying traffic is down, and it's so funny. Like, of course it's down. And I'm no economist, but I shake my head every time I see a stupid economist. Oh, the economy is doing worse than we expected. Well, an 8-year-old would have told you that 3 months ago when you shut everything down. What else? Okay. AAL, we were day trade shorting yesterday. That looked great. Now see, AAL cleared this prior support. So that's why I like that one. And you have the upside shakeout here on July 1. And just me personally, I don't like this airline. So I think fundamentally, they're one of the weaker ones. And so, that little fundamental bias confirms the weakness. I mentioned to Debbie yesterday, she said, hey, let's look for the next company that's going to go bankrupt. And I'm like, well, here's potential. Cruises are safer than some cities. Is anybody cruising? I know. Yeah, there's a gap breakout. The bars, you got to give it room when I see all these overlapping bars, but it's a gap breakout. Are there any cruise ships operating right now? I know none in the US. They're still banned and they keep doing voluntary extensions. All right, yeah, I didn't know. What do we got here? A gap down, 3150, no pattern. Gap up, 3360. That's a huge gap. The way it's trading, when you see something trading really tight, that to me suggests possible buyout, but regardless, I have no interest. This Walmart took off like a rocket yesterday. Took off like a rocket, and I saw in the news today that they're going to do some $99, annual delivery, free grocery delivery, whatever. Oh, Albert on YouTube's asking about what happened to Nikola. I have no idea, but when things go up from $10 to 95, we had a beautiful put spread on it on this day right here, June 15th. We sold a $40 put spread, and then we stopped out, and and made huge money. Nikola upgraded. You know, upgrades and downgrades, they also just make me shake my head. All right, so this stock is up $6, which, just do the rough math in your head, is up over 15%. Did their fundamentals change overnight, 15% stronger? No, but just the fact, that's why I say we trade people. I mean, that's just stupid to me. I think it's just Wall Street. It's the way they play games. They play games with traders. Plant, I just looked at Planet Fitness because there was an article in the paper, in the journal today, saying traffic at gyms are 57% down. And, you know, that's making everybody mad, including, they said, mall owners or strip mall owners, because, you know, they would be the beneficiaries of big gyms paying rent. And now in South Florida, they're talking about shutting down gyms again. So I just wanted to see if there was a trading opportunity in Plant. And this would be maybe 30-minute low, maybe a 1, 2, 3 target gap fill. Because eyeball, man, that's loud. Just eyeballing it, maybe 51 bucks, whatever. We'll make it a $5 run out of that thing. So that's worth watching. KKR, this is they bought some company, but there's a gap breakout. Now monthly, it's near its resistance, but so it's not a core trade, but that's a definite swing trade watch. Bib's up big. That'd be a put spread, but there's going to be no juice that far away. AMC is talking about restructuring, trying to come out of bankruptcy. I've never heard of this stock, but I saw it on the ticker, and that's a recent IPO, but it's gapping to all-time highs, nothing to do. Debbie, I saw your Allstate. Look, this is a textbook head and shoulders. And if Tavo were here, he would tell us that this, well, it's not a Medusa where you got two heads, but yeah, you got two head and shoulders. You got one here and you got one bigger one here. So that looks lower. SGH is a big mess. You're gone. SPR got a downgrade. That's the supplier to Boeing. PEB. Yeah, beautiful gap down. Yeah, nice gap down under yesterday's base. SIL, 5-minute high. Debbie is fine. 5-minute high. I don't trade in the first 5 minutes myself. Our PSX is lower and looks lower. NCLH